The spotlight right back to our own markets, and who better than our chartists to decode levels? We've got Nooresh, Merani and Kunal Bothra joining in as always. Kunal, let's get in a sense as to how you expect our own markets to react. What's the expectation, given that we held on to the 25,700 mark and it was a pretty tempered day of trade with all of the global news flow? Is it going to be pretty much status quo like we've seen for the rest of the global markets?
No, in fact, the rest of the global markets have been doing very well. In fact, yes, the likes of Hang Seng, Nikkei, in Shanghai over the last 3-4 days, I think they've done exceptionally well. So I think in that context, yes, we've lagged behind, but maybe I think it's an adjustment of fund flows which is happening globally. I would probably believe that it's more of a temporary correction. And looking at the sector churn, the way the indices are getting back into a very sharp corrective mode, or stocks getting back into a sharp corrective mode, and that could probably lead to many of the stocks coming into an oversold territory much earlier than in a normal phase of a worst phase of a correction for the indices. So I think it looks like that the markets are going through a balanced phase of correction. 25,500 still would probably be a very strong support level. So I think we are still trading at a premium of 170, 175 points on the Nifty. That may drop down to 120, 125 points after today's gap down. But I believe that net 25,500 should be a point where traders could look at a contra buy.
Right. Nooresh, hi, morning. Lots to talk about. Of course, the globe seems to have stabilized already, looking at the US futures. But other than that, for us, part of the correction could also play out because of the F&O curbs. Now, one bit already played out on Thursday. Do you sense that right now the GIFT Nifty is implying about a 1% downtick that will soon get bought into? Or do you think that things could get worse before they get better from here for us?
So the new F&O norms do not really make much of a dent onto the markets as such. There is a phased out thing which will happen. And apart from that, it's not a very huge change as such. It's just the removal of weekly futures, which does not really impact the markets per se. Now, getting into the markets, what we've seen is over the last 3 sessions, it's a shift of flows. Given the massive move in China, and for the longest time, India was beating China by a big margin. So there has to be a shift of flows, and you could see it in the FI numbers for the last 3 sessions. That could continue. It may not stop very quickly. But if you look at price points, 25,300 was the previous high. 25,300 to 500 is the band where it stayed for 4 or 5 days, the markets. So that should be a band where one should be looking to buy. So closer to 25,500 if we open today, that should be a buying opportunity. And from that point, we could see a recovery back to 25,700. That would be the view. And structurally, this correction is good because we had a quick rally, 4 or 5 sessions. This pause gives us a good entry point. So overall, the bias remains positive across the board. The breadth is pretty decent in the last 2 sessions when there was selling from FIs.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.